What's up, everyone? It's Caddy with MoneyVest. So markets here with a very strong rally on the day, recovering back higher from the inflation sell-off. We're going to change the format a little bit of these market updates moving forward because I want to actually do specific videos for different sectors as well. So there's going to be some technical analysis and some macro analysis and fundamental analysis on individual sectors like energy, financials, communication, technology. All those are going to be separate videos now with different chapters that we're going to cover in our videos moving forward. So these market updates are going to be more broad-based index levels as well as Magnificent 7 companies along with a lot of other data points. And then in our next videos, I'm going to be breaking down individual sectors and kind of going over top 5, top 7 stocks in those sectors as well, which I think is going to be very useful for all of you. And we're also going to be starting a weekly newsletter for all the members moving forward with some actionable recommendations in that letter as well. So hope you all enjoy this video and find it helpful. Please make sure to drop a like and subscribe to the channel if you're just joining us for the first time. Links to our Discord and Patreon is going to be down below if you're interested in joining and of course getting access to all the members only benefits, including videos, private videos, as well as Excel spreadsheets. And of course our trade alerts are also going to be a part of the Discord. So links going to be down below. This right here is how the markets did. NASDAQ pushing up over 1.3%, so almost back up to 16,000 here, 15,900 to be precise. S&P closing at just over 5,000 points once again, and the Dow Jones up over 40 basis points on the day. Now, tomorrow, again, is Thursday, so we got the jobless claims numbers coming out. 219,000 is the consensus for tomorrow, and we got retail sales also coming out, which is going to be most likely affecting the retail sector with the likes of Shopify, Amazon, Alibaba, a lot of these companies that are in the retail sector, retail space. They obviously are going to be impacted by these numbers. Consensus is going to be a decline month over month of 0.1%. X vehicles, we're looking at 0.2% increase, and X vehicles and gas, we're looking at a 0.3% increase on the retail sales numbers here. Now, S&P 500 futures edge higher after hot inflation sell-off. So we obviously did see inflation numbers coming in a little bit hotter than what the expectations were. We covered that in our live streams. We covered that in a separate video as well earlier in the week. 3 things that need to happen for the stock market rally to continue in 2024. This is a paper from UBS, and they basically highlight 3 reasons. Number 1 being more good news on the economy would be needed. Investors have pinned much of the stock market's rally over the past year on a solid economy that has managed to avoid a recession. And according to Marcelli, that remains an important factor in driving further stock market gains, while a weaker economy may be welcomed by some because it would lead to more aggressive interest rate cuts from the Federal Reserve. That scenario is by no means ideal. The second reason is going to be we are looking for signs of Fed cuts are delayed, but not by too much. And that's one of the things that I've kind of mentioned in my previous videos as well, that the rate cuts are coming, but the timing, of course, is unknown, and the amount of rate cuts is also uncertain. We know that rate cuts are on the horizon. At some point, the Federal Reserve is going to start cutting interest rates because they're not looking for inflation to be back down to 2%. They're looking for inflation to be on its way down to 2%, right? So there's a huge difference, and they don't want to over-tighten in that expectation that inflation is going to take a little bit longer, because if they keep interest rates higher for longer, that's obviously going to keep putting pressure on the economy as interest rates continue to be elevated. So they want to cut rates, but they want to do them in a timely fashion, and they want to keep a close eye on both the economy, unemployment, and of course on inflation as well. So again, the timeline and the amount of rate cuts are still unknown, but the markets are kind of warming up to the idea that the Federal Reserve may not do 6 or 7 rate cuts in 2024. It may be closer to 3 to 4 rate cuts beginning either in May or June of 2024. We're also expecting or watching to see if AI monetization trends pick up. So this is actually one of the biggest factors, because artificial intelligence over the last year has been one of the most trending topics among investors, among stocks here. Of course, NVIDIA, Supermicro has just gone absolutely crazy. It's gone from $60, $70. It's by far one of my best picks career-wise, because in such a short span of time, this stock has rallied over 1,000, over 1,500% from lows of $60, $70 since when we first started analyzing it back in February of last year, to now well over $900 per share, I think is where it's at, SMCI at the moment. Just absolutely crazy momentum, up another 11%. I have no idea who's buying this stock here with the RSI of 95 and a market cap of almost $50 billion. This is literally going to be one of the biggest bubbles, as we are seeing with a price to earnings of over 61 right now. And we understand that earnings expectations are good, but the comps are going to start coming down on a year-over-year basis. And this stock has just absolutely gone crazy in the last 1 year. I mean, now everyone's talking about super micro. We were talking about it, back in 2023 when literally nobody was mentioning this stock or talking about it back in the 80s and 70s. And of course, since then, it's rallied over 1,100, 1,200%. So huge congratulations to anyone who's still holding on to this stock. I mean, it takes a lot of courage to keep holding on even at these prices. But this is what the markets did today. Tesla up, Nvidia, Meta. We got Microsoft, we got CRM, so Salesforce, Intuit, a lot of companies, AMD, everything's pushing higher with Apple slightly down. This right here, again, is the entire market. So Apple here is rolling over a little bit, and this is on the day. So all sectors pushing higher except for energy and consumer defenses. In the last 1 week, we've seen a little bit of a split market. Again, some technology, industrials, consumer cyclicals, comm services pushing higher, with utilities, energy, defensive materials, all of them pulling back. In the last 1 month, once again, a little bit of a split market as well. Lean hogs, we got orange juice, we got cotton prices all pushing higher. With cocoa, we got ethanol and coffee prices rolling over. And this right here is the year-to-date performance broken down. And this is exactly what I'm talking about moving forward. We're going to switch up the format a little bit. I'm going to give you a much broader, more detailed analysis on sectors, valuations, individual stocks, year-to-date performances, heat maps, bond market, and volatility. I've got a whole sort of playlist on what to cover moving forward. And when it comes to separate videos, we'll be talking about consumer cyclicals, healthcare, financials, industrials, energy, all these sectors. There will be separate videos on them and the top 5, top 10 stocks within those sectors. But if you take a look at year-to-date performance here, technology is still leading the way, of course. Without a doubt, it's had one of the best years. I mean, it's up 43% in the last year and over 9% on a year-to-date basis. Comm services is coming in at a reasonable second, considering that it has Meta and Google in it, and they've both had a very strong year, especially Meta. I mean, it's rallied over 300, 400%, and year-to-date, this sector is up over 7.7. Healthcare is third, right? So it's not consumer cyclicals, which, consumer cyclicals have Amazon and Tesla, and that's exactly why it's not up there with technology and semis, because Tesla has not had the best year. It is indeed down 24% year to date. So this sector is only up barely green, 72 basis points and 15.5% on a last 1 year basis. And healthcare is coming in at a decent third, up almost 5%. But these right here are the more defensive sectors that are down: utilities, energy, real estate, and materials. And these are the sectors that are still struggling on a year-to-date basis, down anywhere between 2 to 6% on a year-to-date basis. Now, when it comes to the concentration of market caps, again, you'll take a look at which sectors and which stocks are really participating on a year-to-date basis and are rallying. Mega caps, number one, which obviously is not a surprise to anyone. Mega caps are companies with over $200 billion market cap, and they're up over 8.6% collectively on a year-to-date basis. Makes a lot of sense because technology and Core 7, Magnificent 7 are the ones that are leading this rally higher. Nano are going to be much, much smaller. So it goes mega, then we're looking at large, then we're looking at mid, then we are looking at, I believe, somewhere between small and nano, and then we've got micro. So it's kind of interesting that nano and micro caps are actually pushing higher year to date. They're up a little bit over 1%. Nothing crazy, but it's kind of clear where the majority of those gains are coming from, because mega caps obviously are the ones leading the market rally here, up over 8.6%. In the last year, they're up over 38%. But nano and micro caps are down in the last 1 year. Year to date, still pushing higher. And small caps, if you take a look, 3.7% down in the last 1 year. Year to date, still down a little bit over 1%. But Russell 2000 is seeing some momentum back higher, which is exactly the reason why I'm very interested in IWM. And I continue to kind of pick up more shares. It was up a little bit over, I think, 2% today. So 2.3% green on the day. So very nice move back higher, almost at $200. And I'll continue to pick up more shares for Russell 2000. Now, when it comes to the valuation of these sectors, right? So energy, financial materials, all these different sectors, they're kind of broken down by forward PE. You'll notice that technology, because it's rallied so much, it's now trading at 25 times forward price earnings multiple with a PEG ratio of 2.66. We got a consumer cyclical price earnings, a multiple of 18.6 with a 1.7 PEG ratio. at the moment, and we've got communication services, which is quite reasonably priced. So of all the technology stocks out there, comm services, which includes your Googles and your Metas, is still fairly priced on a forward basis, 17 times earnings and a 1.2 times PEG ratio. Now, don't let energy kind of fool you a little bit, because even though the forward P multiples might be low for these four sectors that are underperforming, the reason why they're underperforming is because of the PEG ratio themselves. Just because the forward P is low doesn't mean they're undervalued, right? If you take a look at the PEG ratio, which is price to earnings on a growth adjusted basis, 6.4, really, really high. So on a growth adjusted basis, even this 9.5 price to earnings multiple is high. If you take a look at materials here, we're looking at 13.7, 3 times PEG ratio. And then of course, 2.2 is going to be for utilities. Again, a lot of these are high compared to technology. Technology is at 2.6, right? But consumer cyclicals, which is your Amazons and Teslas, Metas and Googles, they're still kind of reasonably priced compared to growth expectations. But once again, these are only expectations. They can change, they are uncertain, and they are going to change, right? Nothing in the markets are permanent. So I would take that with a grain of salt here, that just because, comm services trading at a 1.2 times PEG ratio doesn't make it undervalued. Just because, energy is trading at a 6.4 times PEG ratio doesn't make it overvalued. It's all dependent on expectations, and that can indeed change. Now, this right here are some of the best performing stocks on a year-to-date basis that I wanted to highlight. At the top of the list, we've got our NVIDIA and our Meta, and Eli Lilly is doing really well, so up almost 30%. Then we've also got Merck. So Merck was actually one of my top picks going into the year of 2024. I mentioned that I believe Merck's got a lot of potential. I specifically did a video going over how earnings expectations are so high that it's going to more than, I think, 4 or 5 times earnings here, and it's already up 15.4%. Of course, nothing compared to NVIDIA and Meta, but it's still pushing higher, doing really well. ASML was another one of my stocks that is a top pick, which I believe has a lot of potential long-term in that semiconductor space. Not to mention Advanced Micro Devices was also another one of my stocks that I've actually been dollar cost averaging into. I'm up over 60-70% on this stock also. They're both up very nicely year to date, up over 22%. Novo Nordisk, NVO, is another stock that we have analyzed in the past in our videos quite a few times, up a little bit over 19% here. And then, of course, we got NVIDIA, Meta, and Eli Lilly, all high-quality companies. Broadcom also doing really well, AbbVie, and we got Amazon. Amazon is actually one of my growth stocks, which I believe has a ton of potential long-term as it kind of approaches profitability, and it's also up a little bit over 12%. So lots of momentum, right? So a lot of well-known names, high-quality companies, and they're all up year-to-date, which is good to see. Now let's come down to the bottom of the list. We've got Tesla and Apple really struggling, especially Tesla, one of my biggest positions. So obviously, year to date down over 24%. We've done several analysis, several videos on Tesla here, and Apple down about 4%. It's kind of also struggling with that Vision Pro, which I believe Quest has a lot more potential than Apple's Vision Pro, but that's for a different video. And then we do have some of the other more defensive stocks like Coca-Cola, Exxon, Chevron. We got Pepsi, we got Bank of America, UNH. A lot of them are kind of flat to slightly down on a year-to-date basis. Google is at the 1920 list, still up on a year-to-date basis, but merely up over 4.4% at the moment. So going over to the market, so we do have volatility here. Coming back down a little bit over 9%. So it was just trading over 14. And this right here inside this red rectangle between 11 and 12 is going to be that level to keep in mind. And of course, we do have that green rectangle to also watch between 18 and 20 levels for volatility. When it comes to crude oil, we're starting to see that rollover once again. So it's now trading back under $76 a barrel, down about 70 basis points at the moment. And that is going to be that support level inside this green rectangle. Now, Bitcoin, on the other hand, continues to move higher. $52,000 right now, just a little bit shy of 52K. Ether just a little bit shy of 2,800. So lots of momentum coming in for crypto. And that's exactly why I picked up a spot Bitcoin ETF. It will continue to dollar cost average into that ETF as well for Bitcoin exposure as well. So again, link's going to be down below if you want to join and get access to all those alerts. When it comes to the yields, a little bit of rotation back lower, so back under 4.25%, so down about 0.5% here. The spreads are still negative. We're still on our process of getting uninverted, or that spread's turning positive here. And so right now, again, we're still waiting on that bond issuance, what the supply-demand dynamics look like, so that we can actually start focusing on some tactical trade opportunities, once again, such as TLT and TMF as well. Now, going over to the markets here very quickly, so S&P 500 getting a very nice recovery back up. Every dip is going to get bought up. That's exactly what I mentioned in the inflation video, because there's a lot of money sitting on the sidelines. And for that very reason, there is potential for buyers to step back in, dollar cost average into the market moving forward. So 5,000, that's where we are. Support level is going to stay put at 4,800 with a resistance and a target, of course, back up to 5,050. That's really where the all-time high is. NASDAQ, on the other hand, also moving back higher, up a little bit over 1.3%. So resistance is going to stay put all the way up to 16,200 for the NASDAQ, with the support level staying put at 15,600. So very, very nice, consistent uptrend of higher highs and higher lows, and obviously getting bought back in, considering how much money is sitting on the sidelines. So this video, I'm only going to be focusing on Magnificent 7. Like I said, the 7 stocks, we're going to cover that. And I've got separate, more dedicated video on FinTech, which is going to include your PayPal, SoFi, Visa, MasterCard, all these companies. And we're going to cover semis separately. We're going to cover energy and other sectors as part of our other more detailed analysis on those sectors as well. So when it comes to Apple here, support level is going to stay put at 180, as we already know. That's also somewhat aligned with that 200 simple moving average, of course, and resistance is going to stay put all the way up to 190. So that is going to keep in mind, of course, lower highs and lower lows here. Amazon, on the other hand, also seeing a little bit of that momentum back up. So higher highs and higher lows, so bouncing back higher from that 170 level. A little bit of a gap that needs to be filled still. 176 is going to be that resistance and that target to watch for Amazon moving forward. Talking about Tesla here. And Tesla here continues to struggle a little bit, up over 2.5%, but it's really just consolidating sideways in that range, around $180 support that we talked about in our previous videos. So lower highs and lower lows, very much within the context of this downtrend still, with a resistance and targets back up to $197 to $215 per share for Tesla. So very strong support here for the company. Talking a little bit about Google, Microsoft, part of that Magnificent 7 group. Microsoft here pushing back up 78 basis points, so back over $409, very much within the context of this uptrend of higher highs and higher lows, and support level is going to stay put down to 384, down to $366. Professor Demodron also mentioned that Microsoft is a little bit more overpriced here, which I couldn't agree more with because of how much it has already rallied. Looking at NVIDIA, same thing, trading at an all-time high, $739, almost $740, up over 2.4%. Very, very, very overbought, extremely overextended here. Support level is going to stay put inside this green rectangle all the way down to $400. Another very important support level to keep in mind. It's just absolutely gone parabolic from this ascending triangle breakout, up over 56%. Talking about Google here, and Google also recovering a little bit, up over 0.5%, so 147, 148. Resistance is going to stay put at close to 150, 151 for Google, and support level inside this green rectangle between 140 and 144 for Google as well. And then finally, we come over to Meta Platforms. And Meta here also pushing higher, trading pretty much at an all-time high. So 2.8, almost 3% in the green, with a little bit of a gap that yet needs to be filled here. Support level is going to stay down to 383, down to $352 per share for Meta moving forward. So that's where we are with the Magnificent 7. Of course, almost all of them are overbought, overextended. Valuations a little bit high up there. So not super excited about dollar cost averaging in any of them. I could argue maybe Google and Google is going to be about it. That's somewhat reasonable. Maybe even Apple in the 160s makes sense. But other than that, I think a lot of them are trading at levels and prices and technical levels that warrant some caution here moving forward. So hope you all enjoy this video and a complete update on the markets here. So this is going to be the new format where we cover in more detail a lot of different things about the markets, and of course more sector specific analysis coming out in our future videos. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.